Welcome to the Stock Market Morning Prep video for Tuesday, June 15th. Markets green across the board. We had a little bit of follow through from Friday, and Friday, how slow it was, really complemented yesterday. We had such a slow day due to the fact we had a big gap up, and it just seems like there is nobody interested in this market, and the market just grinds higher. Dow Jones up 111, Nasdaq up 24, S&P up 9, and the Russell, weakest of the five indexes that we follow, down 5, and of course transports were up. Actually, transports made another new all-time high yesterday. But where are the stocks? They're not following the market. It's the indices that are moving higher, at least the majority of them anyway. Very strange. I mean, extremely strange price action that we're getting. And again, the market trend is up, and you have to follow the market. I mean, but there are several times where you look to buy stocks, and you buy it, they move up a little bit, and it just kind of die. They just sit there and do nothing. And here's a 5-minute chart of the S&P, and to have stocks, the Dow Jones at one point made new all-time highs again. Where is the trading? There is absolutely nothing going on here. You could see this. I mean, we literally 197.59, 30 cents in the S&P all day. Yes, we did get a gap up, but that was it all day, and that's just killing the day trade. I mean, there's no volatility at the moment, but obviously it's not going to happen much longer, and it can't go on this way. Pretty much, I don't think any. At least I'm looking for a decent sized pullback going into the fall. I mean, and we're coming into a seasonal time of choppiness to slightly down. We do have options expiration coming up, so that does give a little bit of a bullish tone. Janet Yellen is speaking today and tomorrow, and I'm probably thinking that she's not going to say anything to hurt the market. Obviously, if anything, she wants to raise the market up even more, which is totally insane, but it is what it is, and that's what we have to deal with as traders. So I want to run through a couple of things today before we go into the indices. I had a couple of real good emails asking about the banks, since Citibank actually posted yesterday, and let me just run this into a daily chart. We're going to put up Citibank here, and I like the banks. I've always liked the banks going into this year. I mentioned, I said this year coming back in December of 2013, I think the banks are going to be one of the better drivers. Now, and I still like Citibank. I really do. I like the base that it's building here. This is something that I really like. Now, it needs a lot of work. If you looked in the beginning here of December 13, we rallied, gapped up, and we just sold miserably. And it had some issues. It had the lawsuit going on, and now they're paying their lawsuit. Is this a catalyst for the stock to move higher? It is. I think it's possibly, but with a big gap up like this, now you're sitting on the 200-day moving average. I would like to see this backing and filling a little bit more before it breaks out. And if it does break out, then we'll put some fib targets up above here. But I like Citibank in the longer term to watch it, sort of like the underdog of the indices. Of the banks. Now, if you look at Goldman also gapped up, and Goldman's reporting today. Now, Goldman, a little bit of a different breed, right? I mean, it rallied. We have this symmetrical triangle here that we saw, which I actually missed on my analysis, and then rallied up, and now we pulled back a little bit. So if Goldman comes out with good numbers, I think you could see Goldman and the rest of the banks start to rally too. Now, here's the only thing. Banks like yield, right? That's where they make their money. Now, here's the 10-year versus the 2-year yield curve. Now, this is a spread of the 10-year. When this widens, as you can see, you'll see this, the XLF starts to rally really hard. And when you see it start to taper and start to kind of come down, you'll see it kind of flatten, and like the XLF will rally a little bit with the market, but you see the banks really haven't gone anywhere. This is what you want to watch if you're a bank trader, or if you want to trade some of the banks. If the spread starts to widen, the 10-year versus the 2-year, and this starts to really start to rise, that's when you really want to start picking up some bank stocks. Now, can you pick them up early? Sure, but you're susceptible to market conditions as well. So why not wait and look to add them to your portfolio? Now, if you're day trading, obviously it's a little different. But keep an eye on this. This is actually write down this symbol, and then watch it. It's a nice little. You got a clearly well-defined downtrend, a narrowing yield curve. Once this thing starts to open up and the spread start to widen, you're going to see a lot of these banks start to move again. Okay. Now I got another question on the builders, and it's really weird. The builders, I like the builders as well. I think the builders actually start to move higher. They're in their seasonal time of the year of strength, but we haven't really seen that. We've had some really good housing data, but then we had some pending home sales and some of the new home starts, and they were a little bit soft. Permits were a little soft. So you see that we after this breakout, we kind of consolidate. Now this, to me, DH1 is one of my favorites here. It actually came all the way back up from this area, if you could see here. Back from December, we rallied, and then we consolidated here, made that little channel, and now we're breaking back out again. And now we're just kind of consolidating into the averages. So DHI is one of my favorites here. Nice bull flag into the moving average of support. Toll Brothers, a little weaker. We broke that little support, but we do have a bullish falling wedge, which is a bullish pattern here. We got average, lower than average volume on this pullback, which I like. I would let it get back up to like 36.25, and then look to get into some of the Toll Brothers. Now Lennar, same thing. Exactly the same picture. Nice bullish falling wedge. Is below the moving averages though. So right now, if you are going to buy it, it's counter trend. But let's see if we can get up a little bit. Above 41 here. I would wait, be a little more patient in Lennar, and then I'm going to show you why. And then here's Pulte. Same thing. Now it's clinging to its 50-day moving average. So a reversal in Pulte would be a decent bet to look to try to. Try to get some of these builders here to the long side. As well, I'd be looking to that, and I'm only going to be, as the moment, I'm only day trading. I'm not holding any positions unless they're spreads or something to do with options. Now, here's the reason why we haven't seen much movement, and I've showed this to you many times. Here is the ITB ETF, which is the home construction. It's compiled with a bunch of stuff. Home Depot, Lowe's, Masco, who does all of the sheetrock, who makes a lot of the sheetrock products. Here is the lumber prices, and you mentioned, if you recall, when lumber prices is moving higher and you see home construction right behind it, that's when you want to start getting involved with the builders. And then, as you can see, when lumber prices failed, yeah, we moved up a little bit for a couple of days, but sure enough, we failed miserably and followed lumber prices. Now, lumber prices took a big dump early in early June, and the ITB did not, and that's because of the euphoria of buying the market. Keep buying, keep buying, keep buying, keep buying. But what happened? Sure enough, it caught up, and now it's sitting here. So let's see where lumber prices go in the coming weeks. If lumber prices could spike back above price action in the ITG and start moving higher again, that's the cue to really start looking at the builders for your portfolio. Now, again, if you're day trading, it's not going to mean as much. Okay. All right. So let's go into the indexes. Nothing really has changed. We do have the Japanese yen, spot yen, inversely correlated with S&P, sitting now above the Fibonacci cluster, which is now support. All right, and now that is something that we want to keep an eye on, and this is something that you want to watch intraday as well, because if you get a big run up in the yen, you're going to get a knee-jerk reaction and price action intraday. Now bonds, bonds took it on the chin a little bit, not a big deal though. If you notice, we had one down day. And now bonds are up early this morning, and it's above the 8-day moving average. So we need to see this start to move up higher. Along with the yen, you're going to have definitely at least a little bit of a confirmation that we are moving a little bit to the downside in equity. So keep an eye on bonds here, guys. I do think bonds move up to the 140.26 area. That's the bigger picture target. Now, we came out as bullish falling wedge, a bull flag. Apologize, at the 20, and we came out of it now. So this is a bullish pattern that now obviously triggered. We're looking for the upper end of the trend line area of resistance, 1987, 1990, call it, and let's see if we get up there. I possibly do think we get up there. There's not a seller in sight in this market, and the market's just kind of like a dead fish on the dock, just flapping up and down a little bit with the momentum, with the wind behind its sail to the upside. It's just absolutely crazy. I've never seen anything like this in 27 years doing this. Diamonds hit the 1618 extension, so the diamonds, the ETF for the Dow Jones, obviously made new all-time highs again, and it is now in the extension club, if I should say, 1618 extension. And again, we're at double extensions now, so we have to use extreme caution, and I keep saying it. I know I'm a broken record, but you have to use caution here, guys. And here is the IYT doing good, just hitting right above the 8-day moving average. You'll see at one point when the market does sell off, the IYT will be one of them that will just take a real big hit hard to the downside like it did here. And this was nothing. This was mild. But you'll see this start to really break down. And then once this breaks down, you'll see everything follow. This is the leader. IWM, the weakest of the five, which is not good. So we do have divergence here. But, you know, like I said yesterday, this was miserably weak for 2 months and then played catch up really fast. So right now, divergence, does it mean anything? Absolutely, but you just got to take it with a grain of salt because divergence has not been playing out like it usually should be doing. All right, and lastly is the Qs. And you see the Qs here making new highs. Amazon did well yesterday. LinkedIn had a bid, and Tesla also had a good bid, so helping push up. Apple got upgraded, so Apple did well too. So that kind of put a bid all day into the Qs. All right, so I hope it helps today. Keep an eye on those two sectors. I really like. There's a few things that I'm looking at too as well. I'm going to start presenting them in the morning video. Have a great day, everybody. We'll speak to you tomorrow. Take care.